The broadcast is now starting. All attendees are in listen-only mode.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 11th day of April, 2019. Thanks for joining us, whoever you are, wherever you are. If you're returning, welcome back. If you're here for the first time, a special welcome to you. We are certainly glad to have you with us. I have a chart up of the S&P 500 Emini Futures. It's a daily chart. If you can't see that chart, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds. If you're out of the office, away from the desktop, can't use the GoTo software, go to youtube.com/CFRN/live, and there you will find a live in real-time simulcast of the show as it happens. Thanks to the good folks at YouTube. Thanks, YouTube. All right, this daily chart, we've been looking at it for how many days? Let's take a peek. That would be 1, 2, 3, 4, 5, 6, 7. There's number 8. True story. 8 days just waiting. And what are we waiting for? Well, here's a look. And there we are. Back in October, we had this bearish cross on the daily chart, which led to the worst December since 1931. Yep. Now we've come all the way back to the same price. And, you know, it doesn't matter what time frame you're working on or what methodology you're using or indicator set, unless the clock on the wall for you is price, you might rethink it. You know, unless you're doing well, and then God bless you, don't let me get in your way. Just a word of advice. Price rules, okay? And no matter what indicators say or gurus say or anything else, writing in the sky, price. Always look at the price. And price will tell you what's going on, okay? Not to say that the other things can't act as an aid, but again, if the clock on the wall isn't priced, then you don't know what time it is. And it's really important to know what time it is. And the time now, we are 2% away from the all-time historic high put in right here, September 21st. We had a high, we had a lower high. That's also a lower high, just barely. And here it came. And when we took out these lows, created this bearish cross, we got a leg and a retracement, a leg, a retracement, a leg, a deep retracement. And there it went. Turned around the day after Christmas. And then we had a leg and a retracement, a leg and a retracement, a leg and a retracement, a leg and a retracement. This was the first retracement that came all the way back to the BBC. Shallow retracement, put in another leg. Shallow retracement, put in another leg. Now, this is getting along in the tooth. Without a healthy pullback, I don't see how we go up to take out the all-time historic highs. It looks like here we might be getting that day that began the pullback, but then there was yesterday. And now today we have a little bit of a red candle there. Could this be it? Time will tell. You'll notice up here that the step line has crossed the CFMA1. Price is walking sideways. If we close red today below that step line, that is a significant thing. And that could signal that we are on the way to the BBC, which would take us down to about, we'll call it 2860, 5560, about 30 points below. But that's the shallowest retracement that we would expect if we look at this high, this high, this high, this high, and this low. If we trade through the BBC like we did here, the next rest stop would be about 2815. Seems like a lot. That's nothing. Have a look at this. from that low last December to the most recent high, the shallowest Fibonacci retracement, 24%, would put us back at about 2770. That's 120 S&P points, 1,200 Dow points. Not a forecast, simply letting you know what the possibilities are. A deeper retracement would take us all the way back to 2678. 200 S&P points, 2,000 Dow points. And here's the 50 and the 62, and everybody says, well, there's no way it could pull back 62%. Well, actually, let me show you this. From the all-time historic high, right there, to this swing low, right there, that is a 62% Fibonacci retracement. Now, without a retracement, without a pullback, a deeper pullback, the bull's in danger. It just is. Now, we trade intraday. We also trade Globex, so I guess that's internight. In our live training room, we use a range chart. With our alert service, we look at all time frames, but primarily I focus on the 30-minute. I try to keep it consistent, so when I post a chart, everyone knows what I'm talking about. So if we're trading intraday, if we're trading on a smaller time frame, why is this even important? It is. And there's nothing I could say now, probably to convince you, so I'm not going to try. But if you'll learn to watch this, it's like my son and my daughter, as they were getting old enough to go with me to the store, and their head would be in the clouds, and they would bump into people and get their foot run over by shopping carts. I would say, hey, you got to learn to be aware of your surroundings, okay? You can't get tunnel vision. Some call it the tick vortex. You can't get stuck in the tick vortex. You need to learn to focus on something, but also be aware of your surroundings. Does that make sense? I hope it does. Let's take a look at the numbers from around the world and see just what the world's up to today. And let me refresh my chart. Pull in some fresh data. Oh, today's Dr. Tom Day. I haven't heard from him yet, but as far as I know, he'll be joining us top of the hour. Okay. Now, these are the cash markets. We're going to start here in the U.S. The Dow is currently down 41 points. NASDAQ down 15. S&P 500 down 3. And the Russell 2000 down 1.5. Again, no movers, no shakers. In the commodity basket, crude oil has lost $1.07 today, trading 63.54 last. Gold, taking it on the chin, down $16.40, trading $12.9750 last. In the Asian markets, at the close, the Nikkei managed to add 23 points. Shanghai lost 51. Now for the Shanghai, that's a loss of 1.5%. Hang Seng lost 280, and for the Hang Seng, that's 1%. In the European markets, the FTSE at the close down just 4 points. The DAX managed to gain 29, and the CAC added 35. A mixed day in Asia, mixed day in the UK, and so far it's a big red Radio Thursday here in the US of A. with that, let us go to Michael, get a recap of everything that happened in the live training room today.
Okay. I am ready. Let me bring this over, and the charts over. Dr. Tom. There we go.
You got it?
I got it. I also want to remind everybody, Bert's hosting a meeting this afternoon at 2 p.m. Eastern. 2 p.m. Eastern. Bert's going to be hosting a meeting, going over all our stuff in slow motion. Okay? If you're new, or if you haven't been to one of his meetings, you should take a look. It's the same stuff that I do, but it's just another person's perspective. Okay. Let's see. All right. Good afternoon, everyone. Today is Thursday, the 11th day of April, 2019. Let's see. If you have not taken a free trial, go to the homepage at CFRN.net. And over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you'll be brought directly to this page. All we ask for is your email, your first name, and how you found us. Hit the submit button. Once you hit that submit button, you'll be sent a confirmation link. You must click on the confirmation link, okay? You must click on the confirmation link. If you don't click the confirmation link, we don't know you took the free trial, okay? Okay. The spreadsheet. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 11th day of April, 2019. Today we made 2 ticks in the euro, 1 tick in crude, and 8 ticks in gold. That put us at 102.50. Today it took 113 minutes to get to the goal for the day, and 10 trades. Oh, this should be 102.50. Sorry, 102.5. And we took a total of 10 trades. It's a slow start to the month this month. We're 9 days in. We're only up $723, but we're positive. On the year, now we're on our 64th day, and we're up $7,176. Now that is one contract, 2 hours per day. One contract, 2 hours per day. Okay. That's just 605, yeah. Okay, let me minimize this and we'll go through what did or didn't happen. All right, on gold, this is the whole day. I missed this one this morning. That would have got me the goal on the first trade right there. I'd been sitting at my desk at 9:31, but I was a couple of minutes late. I missed those 2 right there. And then I had a break even there, and I picked up 8 ticks right here. That was the last trade of the day. You see 11:23. And then during the break, there was a shorting opportunity right here that would have, this was all putting in new lows right here. It would have given you, some sort of profit in there. And then that would have been it. That was it. Right now, it's given a short off the BBC right here, right now. So you could actually short right here at 96.6. 96.6. Hang on. And that was it for the gold. Okay. Now on the euro, we had a break even right here, and we picked up 2 ticks on this one right here. Okay, this one eventually went up, but once the price closed up above the MA1 here, I moved my stop to break even, and then once it got up a little higher, I moved it to +2. And let's see now. Then it tanked, and this is all during the break in here. There was a shorting opportunity from right here during the break. That would have worked out just fine. Okay. Crude oil. We had a bunch of crude trades today. We started off with a stop out in crude, though. It was all choppy in here, and I probably shouldn't have taken this trade because it wasn't really trending. But we took it, and we almost got our stop to break even. It was 3 ticks in profit right there, and then it came back and took us out. It eventually went up and did what it should have done, but it stopped us out first. So we're -8 ticks there, and we picked up 1 tick right there. And this one here hadn't, it had ticked at +8 ticks at one point. This trade did. And then it came back and I had my stop at +1, and it took me out at +1. This one here, I got +2. I had, again, it was a momentum short trade, so I bumped my stop to +2 pretty quickly. And I ended up missing all of that. That was too bad. I left a lot on the table there. This one here, +1. And we had a break even there. We missed one there. We had a break even there. And over here we picked up 5 ticks to put us at +1 on the day on crude. Okay. Let's see. I missed this one, and then it got really choppy going into the end of the day. Right here, though, let's see, there was a big leg down. You could have shorted right in here, I think, if it wasn't going into the low of the day. Okay, that's the thing. It would have been a short right in here, a little one. And it changed directions, gave you a bounce off the BBC right here that you would have gotten out at break even over here. And over here was a shorting opportunity, right? If it wasn't going into the low of the day. Okay. On the ES, there was one shorting opportunity right in here. Is that today? Ugh. Other than that, the ES was just nasty. It was just nasty. During the break, it made a big move down, though, so that's progress. And let's see. Yeah, there would have been a higher highs, higher lows. Yeah, there would have been a bounce off the BBC here on the long side. That doesn't look like it would have worked out. I think it's still the in it, right? 89.50. Did it go down to? It did go down 87.50, so it might have stopped you out right here. Okay, and that was it for the ES. So back here, here. If you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. Today is the 11th day of April, 2019. We made 2 ticks on the euro, 1 tick on crude, 8 ticks on gold. That got us to 102.50. Today it took 113 minutes and 10 trades to get to the goal for the day, which happened to be 102.50, and we took a total of 10 trades. So on the month now, we're at 723.75, slow month. On the year, $7,176. That's over 64 days, averaging 112 per day. Okay. Now, if you have not taken a free trial with us, go to the homepage at CFRN.net. Right here in the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you will be brought to this page, where all we ask for is your email, your first name, and how you found us. Hit the submit button, and you'll be sent a confirmation link. You must click on the confirmation link, okay? Once you click that confirmation link, then we know you took the trial, but we don't know you took it until you click that link, okay? Okay, and with that, we can pass it back out to Studio A, fabulous Phoenix, Arizona, overlooking the South Mountain, America's largest city park. Dwayne, if you are ready. Okay, Dwayne is not ready. So let's take a look at what's going on here. All right, the cycle is flattening out in the middle here. That's not usually good for a trade. The crude had a short from right here going into the low of the day. The ES doesn't have anything over here right now. And the euro, natural gas inventories came out today. Let's see what happened with natural gas. Yeah, see, the inventories came out right here at 10:30, and it came out less than expected, like 10 billion less than expected. I think. Let me go check that. Go check that number. No, it wasn't 10 billion. It was about 8 billion less than expected. And that sent prices up, which is a good thing. And now it's giving it all back though. And now it's even just put in a new low. It's even lower than what it was. But that's it. And put that over there. And that there. Anybody want to see any markets? Anybody anything in particular you want to look at? Russell. Right here at 11:30. This is when the ES tanked too. Right here. Maybe I should put this back up. Replace something that's not moving very much. Okay. Let's see what else I got. YM. Ugh. See, they all tanked right here at 10:30. Yeah, that doesn't look like anything I'd want to trade. It's a little jumpy. Okay. Sorry. All right. All right. Well, I don't know when Dwayne's coming back, so I'll just keep showing you different markets. Our stuff on different markets. Here's the soybeans. I haven't looked at soybeans in a long time. Dwayne's back.
Rumor has it you've been looking for me.
Yeah. Well, I'm just going through all these other markets.
Okay. I was texting Dr. Tom, and I spoke to Mr. John, and Mr. John might already be here.
Nope, not yet.
All right, he's on his way. So,
okay.
CSK. Let me make sure the YouTube volume switch is on.
Okay.
It is.
Excellent.
Very good, very good.
Excellent.
Joan will be happy. Hi, Joan.
David, did your indicators give a sell sign right after you signed off at 11:30? Let's go look. Let's see, on the ES. Not using the trade setups that we use in the room, okay? It did give a sell. It did give one kind of a sell setup, a sell signal, using the Tuesday trades, but not the trade setups in the room. It didn't. That's the ES. Now let me go look at some of these other markets that I was just looking at.
I got charts.
I know.
Okay.
I know. The YM did give a sell signal. Gave a couple of them. Okay.
Now Now, if you look at my chart, we's about to get a humdinger of a sell signal. Price is going to, I don't know why, and my computer rebooted itself yesterday afternoon.
Yeah, mine too.
For yours too?
Mm-hmm.
Do you have automatic updates installed?
I don't think so.
Yeah, well, that's kind of weird that both of ours did that. Really weird. But weirdness aside, I put the zones on for everybody yesterday, and I got to put them back on again today.
Yeah, I had to do that too this morning.
So as you guys can see, we went from, now zones are an area. Okay, you'll always hear me say that. I know it prints a specific, there's a specific price, just like Fibonacci. Fibonacci points out a specific price. But if you watch Fibs long enough, you'll realize it's an area. Sometimes it'll hit a 50% retracement to the tick. Sometimes it'll spike it. Other times it'll come just shy, right? But after the fact, is it the same thing? Yeah, it is. So this is 2901, and the swing high was 2900. So it went from 93 up to 2900. So that's a 7-point run, and then 7 points back to the zone where we consolidate, and then we make another 7-point run, and then back, and then we make a run that fell short. I mean, we're looking at a double top here. We know this is going to act as resistance overhead until it doesn't, just as we know this is going to act as support until it doesn't. So right here we had what I call a head fake. You see, we get a bearish cross right into a weekly trading zone that, see, we expect the BBC to hold, and we expect the weekly trading zone to hold. Of course, they don't always, but more often than not, they do. And so I call this a head fake because we got a little bearish cross here because we spiked the zone. This one's touching, this one's touching, this one's touching. Consolidation. And if you understand the dynamic of a head fake, you saw this thing coming, and if you were in front of your trading platform at 5 a.m. Eastern, well, you had an opportunity to take that 7-point ride back up till we found support. This time we put in a lower high. In fact, that high, 2900, oh, this one hit 2900 on the nose too. So perfect double top. And we come down, find support at the zone, bounce, but we don't make it back up. Now, I want everybody to look at this. Remember, we came back to the zone, found good support, bam. All right, got that? Now, right here, we came back to the zone, but we didn't manage to get up and put in a triple top. Why? Well, let me show you. You see, on this move up from zone to zone, we had blue and climbing, blue, it turned up. It didn't cross, but, and again, this move didn't go too terribly far. It was, what did I say, a 7-point move? But you had the support of blue and climbing, okay? On this one, right, you have another dynamic in play. You see, when price is above blue and climbing, then blue and climbing will act as support. When price gets below red and falling, that's going to act as resistance. So you see here on this move, blue above the 50, just blue and climbing. Woohoo. And then look what happens up here. When this move is about done, the market sends us a signal. The black step line crosses this blue CFMA1, we call it. Okay. Now, the market even gives us an exit signal right here. Now, granted, that takes back a lot of the move, but it's telling you get out, before it's too late, perhaps. The market on an extended move, and this one's not that extended, but it's enough to show you the example. See how price just walks up, and we cross, then price starts walking sideways. We put in our high, and in a situation like this, coming that close to the zone, that right there might have been enough to say, I'm a celebrity, get me out of here, and you're gone. All right, so that's what a nice long move looks like. This is what a nice long move looks like. Blue and climbing, blue and climbing. Okay, we've pulled back to the zone now again. Woohoo! Let's ride it up to the next zone overhead. Maybe, maybe not. This acts as good resistance often. Okay? Watch that. Understand, if you get long here with that overhead and falling, that may be as far as you get. Yes, we do see it break through at times, like it's not even there. But more often than not, you're going to at least struggle like you did here. See this red and falling? Price tried to launch. Oh, it had to wrestle that thing to the ground, choke it till it turned blue, and look at that. Live in real time. That's how it happened. Now this is a historic chart. Please don't get me wrong. Anybody can look like a genius with a historic chart. I always make sure you understand that. Hey Michael, could you hold for me once? Could you run the show here for just 1 second?
Yeah, sure.
Thank you very much.
Sure, I can do that. John's here too. I can open up the mic for John. There it is.
Please do.
John, your mic. Here you go.
Hello,
Your
Mike.
mic is open, John. How you doing?
Hi, how are you doing?
I'm well.
Thanks for the invite. Okay, listen, the world's turned upside down today. I don't know whether it's Julian Assange's arrest or something else, but the gold markets took a bit of a hit overnight, which unfortunately is not very good technically. I noticed yesterday afternoon the dust, we were talking about the dust almost hitting euros yesterday, and they turned around real pretty strongly going into the close. I got a bad feeling about things after that, because these things usually, when they have a late move like that, it means there's probably trouble ahead for the metals. And I think the palladium getting knocked down as badly as it did has been a sort of, has kind of cast a bit of a pall over the metals. So while they were looking, poised for, I did say, we had to get over that 1320 on the gold to really, even 1315 to 20 to get, to get going. And unfortunately, we weren't able to do that. And I also said the silver had to get up to about 1550. So the way it looks right now, going into Easter, it doesn't look so great for the metals. They might be, there might be a bit of a pullback in the next month or so. But I really think we're, the dollar's living on borrowed time, and the dollar isn't higher today. It's up a little bit. I also think maybe it was the euro thing, the extension of the Brexit, exactly. But as long as the pound doesn't go much lower than where it is, if those things turn around, that could change everything back to bullish again for the metals. So we'll have to
Let me
just sort
bring
of
up
play
gold, John, while you're talking about it here. I'm back, by the way. Sorry about that. Okay.
That's okay.
Okay, there's gold on a 30 minutes. So, guys, you can see what's happened intraday here. Got a leg and a retracement, a leg and a retracement. And these are last week's zones. My computer, I just told Michael, rebooted itself yesterday for some reason, and I hadn't saved my charts for the day. And I just put the new zones on, and anyway, go ahead, John.
So the market also is, I mean, sometimes the gold market turns down ahead of a, it turns down ahead of a pullback in the market. And I just have a feeling that we're kind of running out of gas on the upside on this market.
Yeah,
and,
let me bring up this daily chart. I was just showing it to the other folks here. Let me scroll in on this. Now we're still in that same area that I pointed out, a week ago, John. We're still at that critical area. And if I blow this out, 1, 2, 3, 4, 5, 6. This is our 8th day in this consolidation pattern here. 8 days going sideways. So I agree with what you just said. This market's a little long in the tooth, and I think a pullback, at least to the BBC, better would be here, and then that 24% Fibonacci retracement we've been talking about, it would be the first one since this market took off December 26th. The first 24% Fibonacci retracement. So, I agree. When is it going to happen? I don't know. I got to wait and see like everybody else. What are your thoughts?
It is looking like it could roll over from here, actually, this thing. And so I would look at look, the VIX today is the lowest it's been in ever, just about. So it's you want to keep an eye on the possible reversal. Okay, the VIX, the lowest it's ever been. That means everybody's fat, dumb, and happy. Nobody's afraid. Kind of, yeah. So the Dow is off today. Boeing's up a little bit for a change. The semiconductors are actually about the only thing positive in the mid cap. And look, we did have a pretty, an amazing rebound in the mid cap here in the last few days, which is something you don't want to bet against too aggressively, because when the mid cap is leading like that, it's and the Russell, it can mean there's more strength ahead. Also, you could potentially get a rally into Easter. It's not unheard of for the markets to rally into a holiday. So at the moment, I'd be very cautious about oh jeepers, holy mackerel, the biopharmaceutical sector, the pharmaceutical sector is getting hammered today, very, very hard. We have a bunch of banks reporting tomorrow too, right? Yeah, and that's the other thing. We've had, possibly the most anticipated quarterly, that we're coming into with this massive quarterly rebound. So any kind of disappointment is going to be probably be felt pretty harshly. And by the way, I said to stay away from Tilray the other day. Right. Making new lows today, so it's new monthly lows, not new all-time lows. But right now, I'd be extremely cautious because the intercept, which we were crowing about yesterday, and by the way, we always have stops on everything. 122, it's plunging again to 103 today. Can you imagine? And Madrigal is plunging as well. So there's something's taken this sector apart today, and that in of itself is possibly enough to start a correction. Which one you want to look at? Take a look at Intercept if you like. They're all getting hit. Agio and Intercept, Guild, they're all getting hit pretty hard. All the pharmaceutical sector. I mean, it was looking brilliant yesterday, this thing, and it's been taken to the cleaners today. Intercept. Look at that. Whoa. Jeepers. Yeah. Now that's a daily. Yeah. So we got $10 more. Yeah, about $10, $12 bucks, $8, 8, 10, whatever. Yeah. It doesn't look so. Man, it did look poised for a run yesterday. What was the other one? Agilent? Who was it?
The other stock you just mentioned?
Madrigal, MDGL.
Oh, try that again.
Yeah, that's got a much worse profile, that stock. That's a bad. That stock's probably going to go down a lot. I took a look at Agio, AGIO.
No, that's not. That must not be it.
Sorry, AGIO with an
sorry.
I on the end.
Okay. How about that?
Yeah. It kind of looks like I tell you what, this is probably, this sector is probably going to drag the rest of the market down with it, because it definitely doesn't look very good at all now. And I'm looking at Jazz and Blue and all these drug companies. They look like they're in big trouble today.
So is there any one thing, some legislation, some kind of news that would affect the whole sector this way?
It maybe is an earnings or something bad's had. Maybe it's Intercept and Madrigal. I'll have to check it out later. But obviously something pretty terrible happened last night or overnight to cause this much of a downturn.
So before, when it was just you and Michael, I heard you mention Julian Assange.
Yeah.
What do you? I mean, after 7 years, he sure looked different coming out than he did going in.
Yeah, maybe he's been anticipating this and he wanted to look like a hermit, kind of.
Well, he succeeded.
Yeah.
He gets 10 stars for that. I mean, now and the article that I read, and I haven't followed it real closely since he's been there, but I mean, 7 years. That's a long time. And
yeah, I mean, it's been a kind of a prison in a way.
Supposedly, they took the internet away from him some time ago.
That would have hurt, for sure.
Well, they say, okay, you can't use the computer in the office anymore, so somebody slips a phone under the fence, or however that works. You know what I'm saying? I mean, it's pretty hard to keep somebody off the internet in this day and age, with all the different. I mean, I can get on the internet with my Alexa device. I mean, it's just people got watches. You take their phone, take their tablet, take their laptop. Oh, you forgot their watch. They're on the internet. But I don't know.
I think it sounds like there's a world of hurt coming his way.
What do you think motivated? What was his motivation? The whole WikiLeaks thing has he always been a whistleblower of some kind, like a Ralph
kind of,
Nader type,
he's been a kind of I was reading his bio a while back, and his mother always said he was kind of a, kind of just a lone wolf in a way, and a different kind of cat. Obviously they're going to throw the book at him by the looks of it, but
whatever happened with this Chelsea Manning? That's the one that leaked.
She's converted. No, she's a woman. He's a woman.
Oh boy, I missed all that story.
Yeah, uniting under a rock.
I guess so. But I thought, was there prison involved?
Yeah. He got pardoned. He got pardoned by Obama after about 7 years or something, I think. Wow. Or she.
I do have to get out more often.
She was doing something recently. Got a bit of publicity, but I think the thing that could potentially make Trump look pretty good. I mean, look, right now there was some poll came out yesterday showing Trump at 55% overall and 58% for the economy. So that's the highest ratings he's had just about ever. And he's kind of on a bit of a winning streak right now, just about in everything he does. And with the AG bringing up this spying thing yesterday, that really set the cat amongst the pigeons. I mean, the whole all the negative talk shows were freaking out about that last night, and of course they know that their number's up now because the gig is up. Basically, they've been found out, and it's all going to come out, and that could be monumental. To be spying on a campaign, just like we were talking about yesterday. The reach that this exponential coverage can where one Pfizer warrant could potentially cover 25,000 people. It's 1 to the power of 25,000. It's just unreal. So, and they had 4 of them. So I mean, they definitely overstepped the mark, and especially going into him being inaugurated and carrying this on during his presidency is absolute outrage. And all this business about being a Russian agent and all this nonsense. I mean, it's just so far off it's so far out. It's crazy. It's just, I mean, Trump is like a super patriot. It's like the definition of patriotism, this guy.
I can understand a billionaire wanting to be president, but a billionaire wanting to be a secret agent? I mean, that just seems a little silly.
It doesn't compute. It doesn't compute. And
billionaires hire secret agents.
The guy made some spectacular deals with some Russian guys when they had a lot of money back in the 09 in the late part of last decade. If Trump sold him a house for $100 million, good luck to him. What a trade. And to go and to sort of allege some kind of a conspiracy with the Russians because he made a couple of good deals. I mean, it's just insane.
Look at this Bed Bath and Beyond. Remember we stumbled onto it yesterday?
Yeah. Well, that's a sign that there's trouble ahead because really the tech sector is holding the market up right now, and so if something happens there, that's where the weak link is gonna start. So I'd watch if you see a big down day in the Nasdaq kind of leading the rest of the market down. I think given how exactly where we are at the moment, it may be curtains for the market for the time being. But I'm just being cautious here. I'm not ruling out higher prices because this market has been amazing so far. It's really been one of the greatest runs. It's been one of the greatest runs ever, without any doubt. As far as WikiLeaks is concerned, if he pulls out the ace and the ace of all spades, and can prove that the Russians were not behind the leaks, that'll be monumental. I mean, that would be, and he can absolutely verify where they came from, where it all came from. That will be a big deal. I mean, that will absolutely obliterate the left completely, and it'll show up all these intelligence agencies.
Yeah, the head of the Secret Service got fired, right?
Yeah.
And I heard I saw a headline this morning. I wish I had time to read all the articles, but scanning the headlines seems to be all I can find time for.
I think there's a day coming. The next sort of Google or Facebook in the future will be something where you can put a head cap on and download all the news without having to read the papers.
Right. Yeah. No, I got you. Well, we talked.
By the way, there's something very dramatic that came out in the last few days.
What's that?
I think it's on that they have got literally a head cap, an electronic head cap that stimulates part of the brain and people with Alzheimer's.
No, the one that we looked at.
People with Alzheimer's are able to recall 50 years like it was yesterday. That is a huge deal.
That I haven't heard about.
Yeah.
The skull cap we talked about a couple of weeks ago was very different from that. What's some keywords to look it up? Alzheimer, what, skull cap?
I guess a stimulus, memory recovery, stimulus memory recovery.
Oh, okay, let's try that. brain stimulation and Alzheimer's disease.
By the way, just watching the thing here a minute ago on this black hole thing. Did you see what they came up with that yesterday? First ever picture of a black hole.
I saw. I didn't see it up close.
Well, it's 55 million light years away. So you know what the speed of light is, right? So I mean, can you imagine that when you think of our time and the time that it's taken for that for the light from black hole to reach Earth, it's pretty mind-boggling, frankly. I mean, 55 million light years.
Incredible.
186,000 miles. That's 186,000 miles a second every year, you know?
My goodness. A comic abyss so deep and dense that not even a light can escape it. Is that crazy or what?
What was that you said?
A cosmic abyss so deep and dense, not even a light can escape it.
Yeah, there's
We
a
have
lot of
seen
mysteries in space.
This one guy, Shep, he says, we have seen what we thought was unseeable. Interesting. So you saw the image. I don't know what this video shows.
And taken a picture of a black hole. Here it is.
I don't think we're getting a better picture from that. Okay. Yeah. Amazing. But Trump's on top of it. What did he call it? The Space Force?
Yeah. Well, you heard about the Indians. They they had a test firing, shot a satellite out of the sky the other day, out of the space. And I think it produced about 400 pieces of debris, which could threaten the space station. Which is just, you know, they got to outlaw that kind of thing. That's crazy.
That is. Hey, Dr. Tom's here.
Okay.
Hey, Dr. Tom. I thought he was. Okay, John, you go ahead. I've got to step away for just 1 second, but
okay.
Please keep it going, and Tom will pop in just a second. He's got an open mic. All right, thanks.
Well, once again, we're coming back from a down opening in the market. So it's not over yet, in spite of the drug sector, the pharmaceutical sector, and if we can, I guess if we can close anywhere higher than we are today, it's still going to be pretty good. Just be careful of any kind of a late breakdown or a late sell-off. I think if the market sold off late, I'd probably take a shot at shorting it today. The only thing is you got these earnings coming out, so we've got to be careful about that too. The grains, after they got all the way up to about 916, the beans. So they have been kind of edging higher, but they're coming off today. A little bit, not actually quite a bit. I think the grain run may be over for now, unless something drastic happens in a report that I think is due tomorrow. So that could, how that report comes in. Looks like it might be negative actually, but because we're definitely coming off pretty sharply on the grains here today, which may also be a bit of a weight on the metals. Also, the coffee is once again threatening its lows, recent multi-year lows down at 93. Orange juice is hitting new lows today, drastic new lows actually today. Orange juice. Sugar has actually been holding up quite well, although it's coming off again from a recent rally. And cocoa is also down. So there's sort of maybe this gold sell-off is a when all the softs are going down, that's a sign that maybe inflation is not as bad as it seems. So that could be a short-term negative for the metals right now. The rest of the sector, Microsoft, by the way, keeps creeping higher in spite of it all. It's Just a second, take a look at it here. It just hit a new all-time high yesterday at 120 by the looks of it. Well, at 121, almost up to 121. That's a heck of a price for Microsoft, but I'd be very careful here if Microsoft starts breaking down, 120, 119, especially 119. That would potentially signal a trend break at about 118. So, and I would say that Google's also been very strong, but
There's Microsoft up on the chart, John.
Oh, okay, thanks. You can see that little red. Look, a lot of times these sell-offs start with with the kind of chart you're looking at, right? Where you see a kind of a little doji there going negative, a little red candle developing, and tomorrow, if there's a gap down tomorrow, it's probably the beginning of a pullback. So, especially with the way these drugs are going, the only redeeming factor for the market right now is the VIX is making new lows, but sometimes you can get fooled by that. Sometimes you can see the VIX going down, and then the next day it gaps up and can go a lot higher. So it's usually very tricky around these turning points. And sometimes when there is a big correction coming, the first casualty is the gold initially. Then the gold goes down for a while, and then when the market starts selling off, the gold turns and starts going up. That's what happened the last correction back in October last year. Because initially gold did go down a little bit, but then it started strengthening, and as you know, we had a pretty good rally from about August onwards through recently.
Right. Did Dr. Tom ever pop in?
Yes, I'm here. I was muted and I didn't realize it.
Uh-oh. Well, welcome to the show.
Well, thank you. Good to be here.
Good to hear your voice, Tom.
Yes, how are you doing, John?
Not too bad, thanks. We're battling on, and got a nice lift in the cryptos. Since we last talked, the Bitcoin has had a very impressive rally so far.
Where is it at right now? I didn't see it.
It's about up around five, isn't it, Dwayne? I think.
If you hang on a second. BTC USD. Bitcoin dollar. There we go. Okay. Well, that's not what I want. Usually just, oh, there we go. There we go. So we hit
just around 5.
5,500 this morning. Now we're pulling back. Oh, this is gonna set up a beautiful long trade. Just beautiful.
That's very good news.
You like that?
I do, indeed. I'm running a crypto fund right now, and Bitcoin has been a thorn in our flesh, but yeah, I'm thankful to see that.
Okie doke. Well, listen, if you wouldn't mind, I'll bow out and let you guys get into it. I'm not going to say get after it, because I can't stand that guy on CNN who keeps saying that. Let's get after it.
Yeah, the thing I hate the most is when the journalists say, "Well, what's going on the ground over there?"
Oh, what about when they say we got a lot to unpack?
Yeah, but on the ground, I mean, what do they expect the reporters to be doing, floating a couple of feet above the ground? I mean, some of these expressions just drive me crazy.
Yeah. Okay, doke.
Anyway, it's good to see you.
Yeah, have a great afternoon. All the best.
You too.
Bye.
So, Dr. Tom, how are you today?
I am fine, sir. How you been doing?
Well, good.
Good.
Very good. Folks.
Well, I'm too blessed to be stressed.
Also known as, if I was any better, I'd be twins.
I like that one, yeah.
And if you're really happy, if I was any better, I'd be twins out dancing on a Saturday night.
Well, considering I don't know how to dance,
oh, I bet you're a regular Fred Astaire.
Well, at our wedding, I did get out there and stumble around a little bit.
Hokey pokey?
With my wife, no, just us. And I remembered the old box step, you know, from when I was a kid, but we didn't do it very long. I was afraid I was going to step on her or fall down or something.
My wife taught me the two-step when we got married, and I couldn't seem to get it right. She says, just count it, just count it. 1, 2, 1, 2, you know. And some nights she'd say, stop moving your lips. Just count in your head. Okay, honey. Yeah. But that was I've hung up the white suit and platform shoes. I don't use those anymore. So.
I was so glad to hear they were patent leather, probably, right?
You know, I think they were, but they were blue and white.
Oh, no.
I was cool before John Travolta broke out in the Saturday Night Fever. I also wore a blazer, loafers, and no socks before Don Johnson ever did. So I'm really an early adopter.
I can see that.
Yeah. What do you think about Julian Assange?
Well, I am so glad to see this finally coming to an end.
The before and after picture is pretty dramatic, right?
Oh, yeah. I mean, the pictures they've been showing are these very confident pictures of him up on the balcony, and now he looks like he's aged 100 years.
And he looks about 6 inches shorter.
Yeah, well, they were carrying him.
Oh, they were. Oh, I didn't realize that.
He thought that if he didn't agree, if he fought back, that somehow it would give him some kind of legal advantage. I have no idea what that means. But yeah, they were carrying him, and that's why he looks so short. But the guy, you know, when our current Secretary of State was the head of the CIA, he referred to WikiLeaks as a hostile foreign intelligence service. And I think he was absolutely right. One thing I didn't like about the reporting on it was Harris Faulkner was referring to his conspiracy with Bradley Manning, and he was still a guy back then. They hadn't mutilated him, and she referred to him as Chelsea Manning. Well, I won't ever do that, because he's not a woman. He's a man who's chosen to mutilate his body. So I would never refer to him as Chelsea Manning, but at least get it correct. At the time that he was committing treason, he was a member of the armed services, and he was Bradley Manning, and he betrayed his government. So why he has to be so politically correct in calling Chelsea Manning? If anything, she should have said Bradley Manning, who has since changed his name to Chelsea Manning, or something like that, you know.
Well, I think there was probably no greater person of the year. Is that how they call that? Oh wait, I believe they actually called it Woman of the Year.
Oh no.
You know what I'm looking for. So
why don't you just put Manning in the subject line?
Well, no, it wasn't Manning. It was actually Mr. Kardashian. I thought they would just show the covers here. Okay, let me back out of that. And
same thing with Bruce Jenner.
Yeah, that's right. That's what I'm talking about. Right. That's Mr. Kardashian. Best Person of the Year, Women of the Year. I'm maybe it was just a bad dream, but I thought let me just put in Jenner. There we go. So is this the Time magazine cover? Now, maybe somebody just told me that because they knew it would get my goat. And I don't mean to offend anybody in the audience, not at all. I'm just saying it is a statement of the times that we live in. You know, right, wrong, good, bad, you know, what you do behind closed doors, I mean, that's your business. Okay, Time Person of the Year, 2015, runner-up, maybe, okay, maybe they only got to the short list.
It says the short list there.
Yeah. So, I mean,
I saw a post yesterday where some father was celebrating the fact that we now have a 4-year-old daughter, and they had changed their 4-year-old boy into a girl, and they were bragging about it on Facebook. How in the world could a child 4 years old make such a life-altering decision? They did it because they wanted to be politically correct, and they wanted to be cool and everything, and so they mutilated their son's body, and now he's going to have to take hormones for the rest of his life to keep up the illusion that he's a girl. It just
someone I know very closely, and of course I won't call any names here, but a teenage daughter wants to become a teenage son. The mother supports it. The father is very conservative and vehemently against it, and I think it's ultimately going to be settled in the courts.
I'm sure it will.
Because the mother wants to sign the paperwork so that, you know, the process can begin, and dad says, you know, over my dead body.
Yeah. As long as the child is a minor, the only place it's going to be settled is in court, unless they come to some agreement.
Now, would legal age for a decision of that magnitude, would that be 18 or 21, or would that depend upon the state you live in?
I think it would be the state. It really did. It would be at least 18 any place.
At least, right. Because I know New York, I think, and some other states, they're raising the smoking age to 21, which I think is a very good thing.
Yeah.
Because I think if a teenager, if a kid actually got through their teenage years without ever smoking, by the time they turn 21, it's probably not even on their mind. And with only 14% of Americans smoking today compared with, oh my goodness, everybody in the past, kids aren't as influenced as much to pick up that habit. I mean, when I grew up, if you went into the bank, you know, you stood in line at the bank and people were smoking. You went to see your doctor, you know, when he called you into his office, he was sitting there smoking.
Right, and he's treating you for emphysema. He's treating you for emphysema or lung cancer.
Yeah.
And he's smoking a cigarette in your presence. I mean, it's like...
And Sunday night after church, everybody would gather out on the lawn to have a smoke.
Not in my church.
Well, no, I'm talking back in the late 50s, early 60s. Well, I didn't see much of the late 50s, about 2 months. But the 60s I saw, and no one looked down on you. You weren't bad. You weren't wrong. You weren't stupid.
Now, the churches I was raised in, they preached against it ever since I was a little kid.
Okay, now, you know, you're right. I'm speaking of some of the other... I was raised Pentecostal holiness. You couldn't go to the movies. You couldn't dance. That's why you don't dance. You couldn't dance. Couldn't wear any makeup. Couldn't put on any jewelry. It was uber strict. Now, we had, in the little town I grew up in, we were the Church of God. And we were the Church of God out of Cleveland, Tennessee. That was our home office. But, no, in South Georgia, you got lots of Baptists and Methodists and...
Well, a lot depends on if it's a tobacco state. Like there were certain denominations that were a little more liberal about things like that. And in North Carolina, for instance, they would smoke because the state made a lot of money with... That's
big tobacco.
Yeah, but other people in the same denomination up north, they would. But you mentioned dancing. I'll tell you a quick story that I want to get down to something serious. But my wife and I went to see this pageant at a Baptist church in Fort Lauderdale.
Uh-huh.
And they started off as a Christmas pageant. They started off with everybody in Victorian dress. So the pastor's wearing a outfit from the time and a top hat. And his wife is dressed in a Victorian dress as well. And they opened it up. They come out on stage waltzing and twirling around and so on. And then all of a sudden, his wife says, "Wait." And they stopped. And she says, "Can Baptists dance?" And her husband, the pastor, said,
"Not the white ones."
Well,
but go ahead. I'm sorry.
He says, "Well, some can," and they continue dancing.
Yeah, that's fun. Now, as my grandmother got older, still the same church, still the same congregation. In fact, the congregation now, it's the same 40 people I grew up with. It's just they're all dozing off now during the service, kind of a thing. But later in life, after my grandfather passed away, she spent 20 years alone in a little apartment before she went into a assisted living place, a home, which was the best thing that ever happened to her, because she'd been alone for 20 years. Now she had somebody to talk to and somebody to, fix her meals and wash the dishes. So she'd been very, very happy there. But I noticed during that 20-year period she was in her living alone, I went to see her and I saw something I'd never seen before. Granny Reeves had a little of that, I don't know what they call it, rouge or blush or make your cheeks a little red.
Yep.
Faintest hint of a little bit of lipstick on her lips, and she had on earbobs. Now, you kids call them earrings, but back in the day, they were called earbobs. And I'm like, she could see I was looking at her, and she's looking at me, and she's waiting for my response. And quick thinking on my feet, "You look beautiful." "Oh, son, I'm so glad you said that." But it was startling because I grew up with a grandmother that, no, none of that.
Makeup was sinful, right?
I'll never forget the night my grandfather smuggled. See, him and her, they weren't exactly on the same page all the time, but I'll never forget the night that my mother, I had wanted to go see, what was that first motorcycle? Oh, Hell's Angels, right. Hell's Angels, the movie came out. We had a little theater in downtown Thompson, and it was playing, and I asked my mom if I could go see it, and she said absolutely not. So I was spending the weekend at my grandparents' house. My grandfather snuck me out, took me to see the Hells Angels at the little movie theater, and when Granny and Mom caught wind of that, oh boy, because number one, our religion says you don't go to the movie theater, and if you do slip up and go, you sure don't go to see the movie The Hells Angels, which, by today's standards, that could be on Saturday morning cartoons, for goodness sake. It was pretty mild, if you know what I mean. All right, you said you want to talk about serious stuff. Let me tell the audience where they should go. I've been wanting to tell them where to go for a long time. Go to CFRNgold.com. Now, that's one word, CFRNgold.com. And this is Dr. Tom, and every Thursday he comes and visits with us. We kibitz a bit, then we talk about things. Last week we talked about getting out and staying out of debt. Typically the conversation runs to investment grade gold, and the good doctor here is the doctor of investment grade gold. What are we going to talk about today?
About bonds.
Okay.
Not something we talk about much, but I think it's an important subject for everybody to know about.
Let me share with you my humble bond chart. Oh, by the way, for those of you that killed it in copper this morning, congratulations. And you're welcome. Okay, bonds. Okay, now this is bonds on a 30-minute. Ooh, getting hit hard. Oh, no, that is bonds, but let's put it on a daily, just to get some perspective. This is the 30-year bond futures, guys. So it's not your father's bond, but it's a hybrid. It's a derivative. I'll turn it over to you.
Okay.
Do you want the charts?
Yes. Let me let me go to my PowerPoint.
Now, on the daily, guys, I want you to, you all heard what I said about the S&P earlier. Now, and we're looking for a short trade right now in the S&P. It was on the other chart. I got to get it into the Telegram. You see what's happened here on the daily? Leg, retrace, consolidating 1, 2, 3, 4, 5, 6, 7th day. The high probability here is for a bounce, but we have two things against us. Red and falling, about to cross the 50. So this is a critical area right here for bonds. Okay, Dr. Tom, take it away. Oh, let me send you the charts.
Okay.
Here they come. Okay, you should have a pop-up.
I do. And let me get to the right one. And it's called, you should be seeing on your screen now.
Who will buy the bonds?
Who will buy the bonds?
Now that Ben's out of a job.
Yeah. Okay, let me
Ben Bernanke for
go back
those.
to full screen.
Full screen.
All right. So, Uncle Sam wants you to buy U.S. bonds,
Yeah,
right?
this is a real thing, folks. I mean, you used to see those everywhere, right?
Yep.
Back in the
They
day.
were very popular.
Yeah.
A lot of World War II was financed by war bonds.
War bonds, yeah.
And
what
their
kind
big
of interest
campaign.
did those things pay?
It was very low, like 2%. But they would have a famous singer or someone come to give it a show at a movie theater, and then someone would get up and give the pitch for the bonds. They did it everywhere. They got actors and so on and behind the
So
war
this was
effort.
done more out of patriotism than it was for economic gain.
Absolutely. But today,
Tell that
most
to a
people-
millennial.
Yeah. Today, most people that have investments don't even think about bonds, and they don't think they have bonds. But if that's you, if you don't think you have bonds, think again. Because in most cases, if you have an IRA, if you have a 401k, if you have a pension plan, if you have an insurance policy that has a cash or investment component to it, and in a lot of cases, even if you have mutual funds, because so-called balanced mutual funds are usually half bonds and half stocks. You have bonds. I would say that at least 90% of the people on this call own bonds, and most of them don't even know that they do. But you say, well, so what? Bonds are safe, right? Well, let's find out. First, just let me read you this statement. When you invest in any financial instrument, not just bonds, anything, your first question should be, will there be a market for this when I decide it is time to sell? In other words, is there an exit strategy? If you can't answer that question with certainty, you shouldn't be buying it. You shouldn't buy anything or invest in anything that you don't know that you have a certain way to get out of it. Today, with China selling off 97% of its short-term U.S. treasuries, which have always been considered the safest bonds, this is a serious question, and it's one that you should seriously consider. So, if you look at the three charts in front of you, you can see who was buying the bonds back about 30, 40 years ago. The Fed was only buying 10%. Foreigners were buying 50%. And the rest of it was U.S. buyers, 40%. That's individuals, that's bond funds, and again, mutual funds that are partially in bonds. So you look today, and the foreign people have gone from 50% down to 30%. They've figured out what the U.S. people have figured out, because hardly any bonds are being bought. You see the 40% U.S. People, they're not on the second one. That's today. And the Fed is buying 70%. Now, who are the foreigners that are buying it? Well, most of the big buyers, mainly China and Japan, aren't buying anymore, or they're buying very, very little. So, go ahead.
Is the Fed buying the bonds with money they have loaned to the U.S. that they will then be charging us interest on?
Yeah, they have to create the money to buy the
somebody ought
bonds.
to dial 911 right here, right now, because that's criminal.
It is. It's a big scam. It'd be like you taking $100 out of your right pocket and putting it in your left pocket and saying you loaned yourself $100.
And the right pocket charges the left pocket interest.
Yeah.
And the left pocket didn't even want the stinking money anyway.
Exactly. And look, if by some miracle we were to pay off all of our debt today, let's say China just got magnanimous and gave us the money to pay off all our bonds, we would have no money in the country. First of all, because all our money is debt backed. Used to be gold backed until 80-some years ago. Now it's backed by debt. So you would have no money. But don't worry, because the Treasury would immediately start buying from the Fed again. The Fed would create Treasury instruments, pretty little pieces of paper. The Treasury would print up some other pretty pieces of paper, which we think of as money, and they would swap hands, and everybody's happy. So we would have money again. But now, here's the big part of this: the foreigners who are still buying our bonds are the countries that aren't very financially sophisticated. So they're still buying the myth that U.S. bonds are safe and safest thing in the world you can invest in, and so on. So in the future, we're probably going to see foreigners still buying 30%, but the Fed is not going to be able to continue doing what it's doing, because people think, well, we can just keep on printing money and printing money and printing money. No, you can't. You can't keep printing it unless there's someone who's buying the underlying instrument, in this case, the bond. So in the future, who's going to buy the 70%? I think that the whole U.S. bond market will pretty much fall apart, because nobody's going to want our debt, and you can see why here. Little background, there are many different types of bonds. There are government bonds, which we've just been talking about. There are municipal bonds. These are not just cities. Most people think of municipal bonds as cities, but it's also counties. It's also taxing districts, like a utilities district, a fire district, whatever. So there's all different types of municipal bonds. Okay. Even states sell bonds, and those are called municipal, even though they're not for a municipality. And there's corporate bonds, usually referred to as junk bonds. And what I want to do is just briefly go through the three different types. Government bonds. Here's some headlines about government bonds. Wall Street Journal. Are U.S. Treasury bonds safe from inflation or deflation? The Market Oracle. U.S. Treasury bonds safe haven or wealth cemetery? CNS News. China drops 97% of its holdings in short-term U.S. Treasury bonds. That's really hurting our bond market. And then, of course, the big one reported first in Bloomberg, we think everybody reported, United States of America loses its AAA rating. So no one ever thought that would happen. If you'd asked anybody, could that happen? Any economic expert, professor, whatever, they say, never. How could it ever happen? We're the safest country in the world. But it happened. Okay, so here's the different treasury instruments. People sometimes get confused about the different types. They say, well, it's not treasury notes, it's treasury bonds. Well, it's actually both, and treasury bills. Treasury bills have the length of time that you can buy them for are anywhere from 4 weeks to 1 year, so they're very short term. Treasury notes are 2 years to 10 years. Bonds are 30 years. Now there's something called a tip or tips now, which are indexed to inflation. Okay, so Treasury inflated securities, and they're supposed to keep track of inflation. They don't do a very good job of it, but those can be bought for anywhere from 5 to 30 years. Maturities of U.S. Treasuries over 10 years, so that would be the bonds, not the bills or the notes, have average returns of 2.18% for the last decade. And so people say, well, at least I'm making something, right? Well, actually, you're not, because inflation has averaged 5% for the last decade. So you're actually losing almost 3% per year. Your money is losing its purchasing power, and if that keeps going on for a long time, it loses quite a bit of its value. So this brings up the question, what's the difference between a United States bond and, say, a bond from the Russian government? Well, what would most people say, Dwayne?
Well, I would say one's a white hat bond, one's potentially a black/red hat bond. I just, the faith of most people, whether you live in America or not, is that America can be trusted. We're good guys. Because we have done a lot of good things. I mean, we give away more money than anybody. If we whoop somebody in a war, what do? We go in and spend our money to build it back up for them.
Like we did with Europe. We rebuilt all of Europe. We also sent out more missionaries than anybody. Any natural disasters, we're the first ones there. We give the most. We're a great country. But
I understand the difference between a U.S. bond and a Russian government bond. And I don't know if your talk is going to go here or not, but on my mind is Millikan and junk bonds. Is that something you want to talk about at all?
We are definitely getting down to junk bonds.
Okay, good. All right.
But the main point here is that U.S., which we think of the good guys, you call them the white hats, and the Russians, the black hats. They're bad guys, so they've always been bad guys. Well, not always, but since the commies took over. But in one sense, there's no difference, and that is that a bond is only worth the faith that people have in it. So believe it or not, in Russia, most people have faith in their government's bonds. Most of the rest of the world doesn't. And as you mentioned, all over the world, people like U.S. bonds. But again, it's how much faith do we have in it. And if the U.S. continues going down the path that's going, where we have $22 trillion debt, and now Bernie Sanders and company wants us to have a Medicare for all, which would add $33 trillion to the debt. Okay, 1.5 times our current debt. How long are people going to have faith in the U.S. bond? That's the point. It's all about faith. Same thing with currencies. The U.S. dollar used to be a gold-backed dollar, so everybody trusted it. Today it's faith money. Okay. A lot of people probably haven't heard of Eric Schoenberg, but he's a very sharp guy.
I haven't, no.
Well, he made a video, and I had to transcribe it because it's kind of hard to show a video in PowerPoint. But he gave 3 reasons to fear U.S. Treasuries. Number 1, the fact that the Fed is buying 70% of them. That means everybody else isn't buying them. Over 2/3 are being bought by a sham organization. Number 2, when inflation rises, as it has to rise, Treasuries lose big time. And 2 guys whose names you probably do know, the biggest buyers of U.S. bonds in the past, Bill Gross and Dan Fuss, have stopped buying them. Okay, even PIMCO, the largest U.S. bond fund in the world, for several years, they stopped buying U.S. bonds totally. I think they were forced by pressure from the government to start buying them again. But people in the bond investor community follow Gross and Fuss closely, not only because the bond funds they manage are among the world's largest, but also the returns of their funds have consistently outperformed all the benchmark indices. So we can trust that they know what they talk about with bonds, but they're withdrawing. Now here's who owns our bonds. This is actually a little bit of a dated chart. I couldn't find a better one. But in billions, China owned almost 800 billion. Japan owned around 750 billion. But in percentages, that worked out to where China had like 27% and Japan had 23%. Well, China is backing out. That's the main thing to know. And Japan still hasn't dug out from under its major stock market crash some years ago, but then also followed by the Fukushima meltdown of the nuclear power plants. So they're trying to build back their country. They're not spending their money on U.S. bonds anymore. Here's Obama making nice with the boss. Why is he the boss?
I see him, yeah.
Yep, and with that big old something-eating grin that Obama had.
No, that's not Xi. That was Xi's predecessor?
This is the predecessor. This is during Obama's era. And why do I call him the boss? Because the Bible says he's the boss. The Bible says the debtor is slave to the lender.
Oh, you went there.
I did. I absolutely did. And even though China's no longer heavily buying U.S. bonds, they still own trillions of dollars worth. They could, if they wanted to, completely just crush the U.S. economy with one decision. They could just dump all their bonds, all the U.S. dollars on the market, and our economy would collapse. So that's why when China has done horrible things like stealing our IP, like not allowing companies to open up in China unless they give Chinese citizens all their patents and keys to their software code and so on. Stuff that we would never put up with anybody else, we've put up with China. Smaller things like it's been illegal for 30 or 40 years to use lead paint on children's toys because children chew their toys and it causes brain damage. They eat the lead. Okay. A few years ago, China was found having shipped tons of lead painted cheaper. And we did not.
I heard someone the other day, I don't know if it was AOC or who, but global warming causes lead-based paint poisoning.
Oh, really?
I heard it. I don't know. I'm not saying it's true or anything. I'm just saying I heard it.
She's a piece of work. She was so happy when she got elected. She said, I can't wait to get to Washington and get inaugurated so I can start signing bills.
Oh, my goodness. Yeah.
Apparently, she didn't realize that she had not been elected president because only the president gets inaugurated.
I'm still not sure she understands that. So,
well, she thinks there's 3 chambers of Congress. So, but anyway, one of the things China did that should have brought the instant wrath of the United States down, they shipped over shiploads, huge shiploads of drywall that was impregnated with formaldehyde, again, because it was cheaper apparently, because they hadn't done it, and then they started doing it. I was offered a house in Palm Beach that was built to sell for $2 million, okay, and it had been built using this stuff. It was a 2-story house. The living room was like 2 floors high, huge cathedral ceiling. And what the formaldehyde does, in addition to being dangerous for the humans, it also causes the wiring and the pipes to deteriorate. So here's this house. I was offered the house for $250,000. The guy who built it had put over $1.5 million into it. He just wanted out of it because every bit of drywall in that place had to be ripped out. All the wiring, all the pipes had to be torn out, and it would have cost $1 million to get it back in sellable shape because of China. And we did nothing. Okay, it's like if you're renting a house from a guy and you're 6 months behind your rent, and he comes over to your house and he drives over your garden and crushes all your flowers and he kicks your dog, what do? Not a lot you can do.
Right.
So anyway, that's the point. Okay, savings bonds are another type of U.S. bonds. Here we got a picture of a Series EE. It has a rate of 1.1%. I had a client that wanted me to manage their portfolio when I was a stockbroker and financial planner, that they estimated was around $3 million. But they wanted to meet at the lawyer's office, have the lawyer check me out. So while we were there, he said, "Wait a minute, I think I've got something that's yours." And he goes out and pulls a briefcase out from under his desk. It's all covered with dust. And he opens it up and it's full of savings bonds. Okay. Hundreds of thousands of dollars worth. And they were all past due. In other words, anywhere from 5 to 7 years prior, their expiration date had come up. So you could still get the face value. You buy these things at a discount to face value, and when they mature, you get the face value. Well, these hadn't made any money at all for 5 to 7 years. They were still only worth their face value because that's the way savings bonds work. So not exactly one of my favorite things. Okay, municipal bonds. Here's some headlines for those. New York Times, Muni Bond Storm. Rubinian laymen say, get out of munis. That was in Forbes magazine. Fitch, which is one of the 3 large grading service, Moody, S&P, and Fitch. The 10 muni bonds most likely to default. Not that many years ago, no one would have even thought that any muni bond would default. Now they're saying the ones that are most likely to default. Wall Street Journal, muni bond default estimate $100 billion. And Steve Forbes, muni bonds at risk. So here's the big picture. We have unfunded liabilities as a nation of over $100 trillion. The states are not nearly as bad because they can't print money, but in a sense they do, and they sell bonds. They have unfunded liabilities of $3 trillion amongst all the 50 states. So this ties muni bond performance to the stock market. The muni bond market is right now down more than $3 trillion, the overall market. So that's about the same amount as the unfunded liabilities of states.
Phoenix is about to default on their pension, the city of Phoenix.
Wonderful.
They sold all of the parking meters in downtown Phoenix, the rights in perpetuity to every parking meter in downtown Phoenix, to Chicago a few years ago, or somebody, I don't know who it was in Illinois, but I don't know, $1 billion. Instead of getting nickel and dime to death at the parking meter, they just cashed out. And I never heard of a thing like that, but I guess it's more common than I knew.
Well, I have a photo of the White House with a sign on it for sale, and a Chinese guy smiling and looking a little bit evil and thinking, maybe I'll buy this. We could see a time when the White House is for sale. I know it sounds ridiculous, but the U.S. government has already had to sell a number of federal buildings. Anyway, according to Meredith Whitney, who is a lady that is one of the top experts, maybe the top expert on bonds, she says that right now, municipal bonds present the largest threat to the U.S. economy. All right. Now, these states call these, what I'm about to read to you, challenges. But I think this is a little more than a challenge. New Jersey has the highest taxes in the country of any state and still has a $10 billion deficit. They have 112 billion in unfunded pensions and healthcare. When it says unfunded, that just means that this is money that they owe, but they have no budget item, no way of funding it. There's no tax or other type of income that's coming in to cover it. So they could default on it. California spends more on pensions than it does on higher education. It's releasing 4% of its prison population to save money. Only federal bailouts, which means bailouts from you in Arizona and me in Florida and everybody else, are keeping California alive. Illinois spends 200% of its tax income. Well, how do you do that? If you make $100,000 a year, Dwayne, and you spend $200,000 a year, what happens? You go bankrupt. They have $5 billion in unpaid bills, not just money they owe, but money that is past due. They're 6 months behind. There's over 100,000 companies and vendors waiting for money. And the comptroller of the state of Illinois admitted we are known as a deadbeat state.
Wow.
So that's a little more than a challenge. Now here's some of the major bankruptcies. If I showed you a chart of the United States that showed all of the cities and counties and utility districts and so on that have suffered bankruptcy, it's huge. It looks like measles all over the United States. And if I showed you the other chart that showed the ones that are in danger of going bankrupt, there's not a state that doesn't have them. But here's some of the biggest ones. Detroit, Michigan went bankrupt. It was handed over to a bankruptcy trustee to run the whole city. City council, mayor, they couldn't make any decisions. The bankruptcy trustee ran the city of Detroit. San Bernardino, California, and Stockton, California, two very large cities. I used to live in San Bernardino. A whole county, Boise County, Idaho. That's the county where the state capital is. Bankrupt. And then I mentioned before there are utility districts and fire districts and so on. They're called special taxing districts. That in addition to the county taxes you pay and the county bonds that get issued, they're also allowed to issue bonds. And dozens of these have gone bankrupt. And these are all municipal bonds. Remember, everybody used to say, after U.S. bonds, municipal bonds are the next safest thing. And most older people had municipal bonds in their portfolios because of that. Here's muni default rates. It only shows Moody's and S&P, but in percentages. As you would expect, the AAAs, very low, okay, 0.52% on corporate by Moody's and 0.6 by S&P. And AA, a little worse, 1.5 by S&P. When you get down to the A rating, which I would still think would be a pretty good thing, 1.29% to 2.91%. And when you get down into the C's, the historic default rates have been as high as 69%. Okay, the averages of default rates of what they call investment grade, high rated ones, is 4%. Non-investment grade up to 42%, and all munis put together around 13%. So when it comes to debt, there's a guy that I really like. He's a Christian economist. His name is Mark Nuttall. When I was the keynote speaker at the Kingdom Economic Summit, where people came from all over the world to find out what's happening in U.S. finance, he spoke right after I gave the keynote. And his website is worth looking at. It's called debtwall.org. And the whole premise is predicting which different bond issuers are going to hit the debt wall. You don't crash into a wall like a fast driving car crash into a solid concrete wall. He predicts that there's going to be states that are going to go bankrupt, and California will probably be the first. Here's world sovereign deficits. I won't dig into this too deep because it would take too long to explain, but basically you can see the deficits in government debt going up. That's mainly what you need to learn from this. Now, let's talk about your favorite, corporate bonds. Okay. Junk bonds doesn't necessarily mean they're bad, but they're junk when compared to U.S. bonds and munis. By the way, one thing I forgot to mention on U.S. bonds, did you know that the volatility, you and John were talking about the VIX earlier, the volatility on U.S. Treasury bonds is greater than the overall volatility of the stock market. Now, we're not talking about the principal amount.
I'd never put that together. And I've been looking at it for years, but now I'll look under the hood. Thanks for sharing that.
Yeah, over long periods of time, like a decade, you'll see greater or lesser volatility in both. But overall, the volatility of the yields. Now, I want to make that clear. We're not talking about the bonds themselves, not their face value, but the yields are why people buy the bonds. Okay. And those yields have been up and down and more volatile than the stock market.
And we've been hearing of late about this inverted yield curve. So,
yeah, that's even more scary. So this is where most corporate bonds belong, in the junk heap, right? Definition: junk bonds are corporate bonds with low ratings from the major rating service, S&P, Moody's, Fitch. Bond ratings are letter grades that indicate the rater's opinion of the likelihood of default. So it's not even this is the safety level. No, they're saying this is how likely it is that they're actually going to default. Why anybody would buy something that had even a 5% likelihood of default, I don't know, but people buy them all the time. It's because they want the bigger yields. Remember I said U.S. bonds 10 years or over 2.18%. You can get some corporate bonds with yields of up to 10%. Okay, I don't know about right now, but I've seen them there. It's just like, remember when Greece was having all its problems, the German government was paying 2.5% on their government bonds, and here's Greece, a fellow member of the European Union, they were paying out 6.5% to 7%. Now, why would they pay out that much? It's because nobody wanted the bonds, because they had already partially defaulted and were likely to default some more. And so people say, well, the only way I'm going to buy your bonds is if you give me a really big yield. So you can see the relationship there.
I like big yields and I cannot lie. Right? That's a song.
On account of what? Oh,
it's a crazy rap song. It was, I like big something, and that was in the world. And then some young Christian rapper changed it to, I like big Bibles and I cannot lie. And it's a whole video. He's up in the library, get all these big Bibles. It's pretty funny. I guess you had to be there, but I'll send you a link. All right. Back to you.
Okay, S&P. Here's some more headlines. I like the headlines because they tell a story in just a few words. U.S. junk bond default rate rises to 10.2%. Now that's worse than muni bonds, obviously. Smartmarket.com, are junk bonds safe? Well, if you have to ask that question, you already know the answer.
Right.
Merrill Lynch, junk bond defaults could surge, which means they probably will.
Now, these are current headlines?
They're within the last year or two.
Okay, gotcha.
Because I did this the last time as a webinar, I think about a year and a half ago. Okay. That's when I last updated it. Morningstar, demand for high yield bonds has nearly dried up. Why would the demand dry up? They're high yield. You make a lot of money. It's because the higher the yield is, the higher the risk. And it's nearly dried up, which means practically none of them are selling. So here's a guy talking to somebody said, well, your word may be your bond, but it's a junk bond. And I thought that was appropriate here. So here's the case against junk. Remember that inflation hurts bondholders, all bondholders, but particularly junk bond. And the U.S. government is firmly committed to a policy of inflation. Sometimes we hear people saying, well, this could be inflationary, this could be deflationary. I say, listen to the people at the Fed. You know that nothing can be deflationary because the government is committed to increasing inflation. That's the only way we can show any growth in our economy. Ben Bernanke said it is in the interest of the federal government to create inflation because it in effect lowers the national debt. Well, if you think about it, inflation lowers the value of every dollar, and so therefore the overall national debt, its value is lowered. So the government owes less money. Second reason why you shouldn't buy junk. The stock market is at best chaotic. At worst, some people think it's about to crash. The same companies whose stocks are at risk are also the companies that issue junk bonds. Okay? Some people equate junk bonds to dividend-paying stocks. And in a sense, they are the same. They're both debt. Like a dividend stock is really a debt instrument. But junk bonds are somewhat worse. Okay. Forbes said, consider junk bonds as stocks with really big but really risky dividends. And of course, the high default rate of in excess of 10%. Why would you buy something when you had a 1 out of 10 chance of it defaulting? So the junk bond market could be in for big trouble because more than 600 billion of high yield bonds come due starting this year, according to Merrill Lynch. Now, almost 90% of all high yield loans that are outstanding today are going to mature in the next 5 years. Now you compare that with an average of 36%. Over time, 36% is still pretty bad, but 36% of all junk bonds will fail, go under, and the people don't get their money in a typical 5-year period. So you compare that to 90%, almost 3 times as much. This is a private report that Bloomberg issued to clients, but
and that
one of my
money's got to
clients,
come from somewhere.
It came out of the investors' pockets, and they're not getting anything back.
Yeah, I was
they're
saying
not
the money
insured.
will pay them back. Yeah,
They're not insured in any way.
I agree. Yeah, I agree.
So here's my 2 big cautions. Don't place much dependence on names. If GM is issuing a junk bond, just because GM's a household name doesn't mean that it's safe. Check
It's
out.
almost a footnote in the history books, but it was too big to fail. So.
Right, exactly. And even some good companies, if they're issuing bonds and they're very high yields, be cautious. Very often on junk bonds, the general credit of a corporation is the only security. They don't pledge any of their assets, specific assets like buildings they own or whatever.
Faith in blue sky is all that's backing this.
Yeah, exactly. Okay, money market funds. Now, these aren't actually bonds, but this is sort of a footnote. I want everybody to understand this. According to Bloomberg.com, an article they wrote called Unsafe Havens, because people think of money market as a safe haven. U.S. money market funds have invested $11 billion in subprime debt. But you know what subprime debt is? These are distressed mortgages. In many cases, they're mortgages on houses that have already been repossessed. Okay. And these things were invented by banks 45 years ago to offer investors better returns than bank savings account while providing a high degree of safety. But there's always a trade-off. If you're getting so-and-so in your savings accounts or CDs, and the bank offers you something else that has a higher return, what do you have to ask yourself?
The greater the reward, the greater the risk.
Yeah, what am I giving up? So more than $2.5 trillion sits in these funds, and it's invested in assets like U.S. Treasury bills, probably the best of this group. CDs, not as good because the bank could go out of business and it could take forever for the FDIC to pay it off. And short-term commercial debt, junk bonds. But the reason I put this in yellow, pay attention. Unlike bank accounts, money market funds, even though you buy them through your bank, they are not insured by the federal government. And everybody I've ever talked to that has money market funds, I ask, I say, do you realize that your money is not insured? I said, oh yeah, it is. It's in the bank. It's FDIC insured.
Yeah, there's an FDIC sign on the front door.
Yeah. And banks now have opened up stock market desks right inside the bank where people can go and buy mutual funds and stocks. And some of the people are stupid enough to think that that money is government insured. Okay. Most people realize they're investing in the stock market. There's no insurance. But the money market funds, it's been, for 45 years now, such a big part of the way banks do business. Most people think that their money's insured, so it ain't. Unbeknownst to investors, some of the largest money market funds are putting part of their cash into one of the riskiest debt investments in the world, CDOs. Those are collateralized debt obligations backed by dangerous subprime mortgage loans.
There's a house of cards, pun intended.
Oh, yeah. And the worst thing about CDOs is that some people buy them and put them in other funds of CDOs. And then those are sold to other ones and down the road. So eventually, when it comes time to pay the piper, it's almost impossible to find out who's actually responsible for those mortgages.
It's like in the movies when the bad guys go to make their drug deal, the guy reaches into the middle of the stack of big kilos or whatever they are, and he pulls one out of the middle. Then he sticks his finger in the middle of that one, and he tastes it to see if it's the real deal. These mortgages that they package, these subprime mortgages that they package together, I can't believe they got away with this. They took all these garbage loans, put them in the middle, wrapped a couple of, decent looking ones around the outside, put a little lipstick on that pig, and then sent it off to Europe's mad. Europe's still mad about all the garbage that we sold them. They took a lot of the brunt of our housing crisis.
Oh, yeah.
It is absolutely... Goldman Sachs, they were selling one thing out the front door and another thing out the back door. And they're still king.
Yep. To the good customers, the ones that they wanted to keep, they sold them the good debt obligations. But to people like, other countries and small brokerage firms and stuff that they didn't care about, they sold them the garbage.
David in the audience just said, go watch The Big Short, good movie on mortgages. David, I tried to watch that thing twice, and I fell asleep both times. I'm not saying it was a bad movie. I thought it was quite good. I don't know why I kept falling, but I got it from the red box, and so by the time I woke up from the second nap, it was time to take it back to the red box, so I didn't get to watch it a third time. Yeah, go ahead. Go ahead.
It is a good movie, and it will help you understand this. Of course, some of it's fictionalized to make it more interesting, but apparently not interesting enough for you. But it has a lot of truth in it. Bottom line is, we have so many trillions of dollars in derivatives not just in the United States, but all over the world, that you mentioned the phrase house of cards. The whole world economy is a house of cards. In 2008, I've said many times, we came within 24 hours of a complete global debt crisis, a GDC, which means a global financial meltdown where banks would go out of business, insurance companies would go out of business, a lot of governments would literally fail, okay? And we barely came out of that by the skin of our teeth. And we're overdue. There's going to be another 2008, but it's going to be worse. So my message
we definitely
to you
had
today,
a warning shot across the bow when the S&P fell from 1,500 and change to 666. That's, you know, what a wake-up call.
666.
I understand it. A lot of people go, oh, yeah, right. Well, I'm sorry. It happened. I was there the day it happened. I watched. It really did happen. And now look where we are. So that's all I can call it, is from 1,500 to 666. That's more than a 50% Fibonacci retracement. And I take it as a warning. This is what can happen. Yep. You know, embrace the possibilities.
So my message today, Dwayne, is don't buy bonds. And if you're in bonds, get out of them. And if you don't know how to get out of them because they're in your IRA or 401k, call me up and I'll share with you how you can get out of them. And put your money in gold, because every kind of bond is subject to default.
But, you know, and I'm sure many people in the older generation that's still with us would, you know, if they had a small retirement nest egg and they could put it in that risky stock market, or they could just put it in bonds, they probably would, just as they were taught, they would put it in the bonds, right? Not knowing any better.
Right.
Not
thinking it was the safest.
Yeah.
But the single safest investment in the world today is investment grade gold, not gold bullion. Gold bullion is good because it protects from inflation, but it's not an investment because it never goes up in true value and true purchasing power. So don't go there, but get investment grade gold. And if you want to learn about how to do that, go to CFRNgold.com and just request the Gold Education Starter Package. After you get it, I'll be glad to talk to you personally and help you with any of your individual situations. I'm no longer a financial planner. I gave up all my licenses when I retired from the brokerage industry. But it's kind of like driving a car. You know, if your driver's license is expired, that doesn't mean you forget how to drive the car.
Is it true?
The only difference is I can't charge you for financial planning services because I'm not licensed, but I could give it away free.
But is it true that you might soon be a consultant to a company that offers that out of Switzerland? Is that possible?
Anything is possible, my friend.
Hey, I said that link I sent you, I also sent it to John. He's fascinated. This other person I have is, I want to talk to you about that.
Okay.
But anyway, there's something else you just said that, gosh, I wanted to. Folks, now he talked to you about bullion, and he talked to you about investment grade gold, the best performing asset. I know it's very tempting when you see these ETFs out there like GLD and SLV, just to name two, but they're okay as a trading vehicle. Like if you want to be in it for a day or a week, maybe even a month, I don't know, but you're not investing in gold. I know it sounds like it smells like it, but it ain't. Read the prospectus. It clearly says in the prospectus, buried way deep inside in tiny print, that we are not in any way obligated to purchase any gold whatsoever with the money you give us. Think about that. And I think that right there plays a huge. Look at how much money is in gold and silver ETFs. What if those scams got shut down, for lack of a better term? Now, see, if they told everybody it was a trading vehicle and would not allow anyone to think of it as an investment vehicle, then I'd be okay with it. So imagine if they shut all those scams down and all that money came pouring into real gold and real silver. Whoa. Whoa. You and I would be having this conversation probably from much nicer places, right? Although this is a pretty nice place. I'm happy with it.
Okay.
Great show, Dr. Tom.
Well, thank you very much. I enjoyed
great show.
it. I enjoyed being with you.
Yeah, no, I enjoy it too. And I know I say this every Thursday when we sign off, but I really would like to give you a call this afternoon and just ask you a couple questions if you got time.
Well, I'm being interviewed on another radio program at 5 o'clock, but between now and then, I'm yours.
Okay. Oh, there was something else I heard of that went down in your neck of the woods just a few days ago. What in the world was that? I'll think of it later. Okay. Again, ladies and gentlemen, Dr. Tom, please go to CFRNgold.com. That's one word, CFRNgold.com, and learn about investment-grade gold. You get a free starter pack, won't cost you a thing. Next Thursday, you'll know exactly what we're talking about. Take care, Dr. Tom.
God bless.
Bye-bye. Okay, folks, let me grab the chart back. There we go. Is that a good bingo? Apparently not. Yeah, so what is that? Ah, that's what that is. All right, we'll shrink it. Oh, by the way, if you haven't backed up your platform today, do it. Otherwise, you'll lose stuff like I did yesterday. Okay, as the show came on, I said, somebody asked if there was a setup on the S&P, and they asked Michael, I think, in the chat box, and he gave his answer, and then, oh, wait, I'm not showing my screen yet. Hang on. All right. Now you got it. So, at the beginning of the show, somebody said, is this a good short for the S&P? And Michael gave his answer, and then I pulled up my chart here, the 30-minute chart. And I said something along, I'll have to go back and listen to myself, I guess. I think something about this is as good as it gets, or this is what we wait for. You heard me. If you remember, type it into the chat box, and I'll say it again. It was something to that effect. Okay, so I put the big circle to draw your attention. Then I put the little, then I put the arrow. Then I put the little square. Okay. Consider short. 28.92, and the potential target is down at 28.84. So that makes for 8 points from zone to zone. Now, of course, all of our traders recognize that this low right here could become possible support. At the beginning of the show, I reminded you that weekly trading zones are an area, okay? Sometimes you get right down and touch it. Sometimes you touch it and go. And sometimes you come a few ticks short, okay? So we don't know what's going to happen next. That's our t-shirt and bumper sticker. I don't know what's going to happen next. Whoa! How could you possibly be a trader if you don't know what's going to happen next? Well, let me tell you something. Everybody out there that tells you they know what's going to happen next, and all the people out there right now who are trying to learn how to know what's going to happen next. Some have been deceived, and others are simply deceiving themselves. When's the last time you changed the past? What, God didn't give you that ability? Seriously? He also didn't give you the ability to know the future. It is only the traders, it is only those individuals, men or women, that recognize and accept and make it a part of their very foundation, who admit to themselves that they don't know what's going to happen next. Those are the ones that succeed. 9 out of 10 fail. You know that. It's right there on the big screen. 9 out of 10 new traders fail. Why? They got no teacher. Futures Magazine wrote this article, it's been a decade or more ago, put out this statistic, and I've never heard anyone dispute that 9 out of 10 fail. Now, that really perplexed me. In any profession there's no 90% failure rate. Not pilots, not brain surgeons, not engineers, not dentists, not even hairstyle. Oh, actually, I did hear there's a 90% default rate at beauty and barber schools that people attend on a government grant. So, but that's a topic for another day. 9 out of 10 got my attention. Why? Is it all rigged? Is it like some kind of a scam? Is that's the only way it could be. 9 out of 10 failed. But as I dug deeper, I found a common thread, person to person to person to person. They had no one to teach them. Well, they might have had a website they went to, or some chat room, or some tip sheet they got in email, or back in the day via a fax machine. But they didn't have anyone to teach them. Would you get on an airplane with a pilot who didn't have a teacher, who didn't really learn how to fly that plane? Would you want to have brain surgery from a guy that didn't go to medical college, brain surgery school? Probably not. Now, every profession, every skill out there, it's just accepted. If you want to learn how to do this, be a lawyer, be a stonemason, be a bread baker, you're going to go hang with somebody that already knows how to do it. They're going to teach you how, right? So why is it in trading 9 out of 10 people think they don't need a teacher? Or if they realize they do, they can't find one. They can't find one at an affordable price who will actually teach them and tell them the truth at the same time. Someone who will just wipe away all the mysticism, pull back the curtain, light of day. This is the truth. This is the truth about trading. See, it's those people who recognize they don't know what's going to happen next, who understand the truth about trading. Those are the ones that succeed. And you know what? The 1 out of 10 that makes it, go track him or her down and ask them one question. Did you have a teacher? 9 out of 10 of them are going to say, of course. How else would I learn? So that's what the 1 out of 10 has over the rest of us. They realize they need a teacher. 9 out of 10 think we can wing it. Or some of the 9 out of 10 got burned so many times they just gave up on getting any help and decided to do it on their own. I talk to people all the time that tell me, Dwayne, I've been at this 3 months with no success. I say, you're lucky. I just talked to a guy who's been at it for 3 years, 5 years, 18 years, still looking to get on the right side of a trade. They're mystified, stupefied. They just can't understand it. It does seem like an evil plot. All I do, I'm no magic man. I'm no brain surgeon by any stretch. I simply understand how markets work. And all I do for our traders, partners, passport holders, I shine a light into the darkness. No sleight of hand, no parlor trick, no mysticism. I just say, okay, this is how markets work. And it's not intuitive, so the mind and the emotions want to fight what I tell you. Because you saw a website or an email or a TV show, and well, that dude, he's got it going on. He said it was going to go up today, and it went up. Okay. Well, what did he say the day before? And the day before that? If you look at their track record, you'll realize they don't know what's going to happen next. But there is something you can know. When God created us, we can't change the past, we can't know the future, but because he gave us a brain, we can have a high probability idea of what's going to happen next. This is not a magic trick. At the beginning of the show, as price pulled up to this weekly trading zone, which when price approaches a weekly zone from below, we expect that zone to be good resistance till it isn't. When price comes from above, we expect it to be good support till it isn't. Okay? Now, only three things can happen at a zone: consolidation, rejection, looks like it came down, touched a hot stove, and ran the other way. Consolidation is the most likely. See, these are 30-minute candles, so this is an hour, hour and a half, hour and a half. That's consolidation. This is rejection. Now, I said three things can happen at a weekly trading zone, and that's called the slice. This isn't a picture-perfect slice, but it will serve for our example. We found support. We found support. We found support until we didn't, right? Now, price. Now, often this slice will come without this prior consolidation. But when we do get a slice, when price slices through a zone like it's not even there, what we expect to then happen is for price to pull back up to the zone and continue in the direction of the slice. In that regard, it is a picture-perfect example. Okay? So at the beginning of the show, I did not know what would happen next, but I was able to show you what we understand to be the highest probability thing. And this is it. Oh, I guess I could show you one more thing. Bearish cross, weekly trading zone, drop from 28.92. The market has now dropped to 28.86 and a quarter, so about 6 points. Okay, now as we approach this low, a couple dynamics you should be aware of. I already covered the fact that zones are an area. Sometimes it gets close, and sometimes it tags it, and sometimes it spikes it. Okay. Now, the folks who bought over here yesterday at this 28.84 price, they're pretty proud of themselves, right? Because from 28.84, this thing ran up to 2,900. That's a 16-point move, blue and climbing, yeah? So if it was good yesterday, maybe it's good again today. I promise you, they're going to take a stab at it. The question is, will they wait for it to get to 84, or will they come in early? Well, gee, why would they come in early? FOMO, fear of missing out. Now, the guys who caught this yesterday, they might be a little more patient and let it come down. But the guy that was at lunch or on break when this thing got going, today he got called on the carpet yesterday. Today he's afraid of missing out. So they'll start hitting the bid, even as you can see right there. They're starting to hit the bid right as we approach this low. But these still got this low. Okay? It is very possible buyers will come in here because they had such great success yesterday with that number. I'm buying my ticket early because I got left behind yesterday. Bid it right back up to this zone and the BBC where we will then have another high probability trade setup to go short back down to the zone. Well, what if it flies right through all that? We won't be in that, because we're going to wait for it to, just like we waited here, we're going to wait for that thing to pull back, show us that it's attempting to go back to the zone below. Because see, if I just see that it's attempting to go to the zone below, I don't care if it actually gets there, because this 6-point move, that's more than enough to get my goal for the day, whatever that might be. And please don't ever let somebody confuse you that you need to take 10, 15, 20 points out of the market every day. Well, some days the market just doesn't offer that. You can become as big a trader as you want to be, have the ability to be, with 2 points a day. Now, I know there's lots of places out there that preach that. Oh, with the S&P, because you can trade, it's so liquid, you can trade so many contracts, just 2 points a day, and you can become a zillionaire. Right. How's that working? See, that's where they stop. They don't actually tell you or show you or coach you through how to get those 2 points. You see, the key to that, we used to have a guy on the show. He was on a number of times, a couple years back. The recordings are in, let's see, iTunes, on the CFRN blog, on our website. You can go back and listen to this guy. Now, this was all vetted. He was the real deal. He has a seat on the exchange. He trades 10,000 S&P E-mini contracts a day. Not all at one time. He trades all day long, right? And on the air, live, I hit him with a question one day. Let me ask you, what do you consider to be a good day in the market? I knew what we consider to be a good day. I just told you. But I wanted to hear it from a guy that has the pockets deep enough to trade that many contracts. And his answer, boy, it drove home what I already knew. But I'm so glad I asked the question. His answer to me was, now this is Mr. 10,000 S&P E-mini contracts a day. Any day that I can take, he says, 2 points out of the market, that's a great day for me. So, if you're chasing that thing where you're going to get 5, 10, 15, 20 points out of the market in a given day, don't let me get in your way. Let me just say that there's a different way to get to the same place, right? 1 contract and 20 points is how much? 1 contract, 20 points. That would be $50 per point, right? 2 points times $20, do the math. What if you're trading 10 contracts and get 2 points? I think the math's the same. Is it less difficult to get 2 points than it is to get 5, 10, or 20? It would seem, would it not? The key is that 2-point figure, and your number doesn't have to be 2. So I know some people that got 1 point, other people 3, 5. So whatever floats your boat, whatever you're comfortable, whatever your ability allows you to do, and whatever. But see, beyond that, it's whatever the market is willing to offer. It's not every day that we see the S&P move in a straight line, 10 points or 15 or 20, right? Back and fill, all that stuff. See, from this high right up here, 2,900, to the current low, 2885, 15 points. But these are 30-minute candles, and a lot happens inside of a 30-minute candle. Let me show you. I'm sure you know, but let's look at it together. I'll make this ES. And I'll knock it down to the chart that we use in the training room to get everybody going so that you understand our methodology, how to use our indicators. Okay. All right. So I'm going back to, what is it, 8 o'clock this morning? No, 7 o'clock this morning. We were up at 2,900 and we came down to, that was a 5-point drop. And then we rallied back up 3 points. Then we dropped 10 points, rallied back up, and from 96 we dropped to 91, another 5 points, and then we rallied back up to 97. So what was that, 92? So 5 points back up. It looks like 5 down, 5 up, 5 down, 5 up. And then we dropped from 96 to 86. So 10 down, 5 up, 5 down. I think everything that I just covered is probably a lot more than the 15 points you see on the screen. So there's plenty of travel. And to think about the S&P, while some days it won't travel in a straight line long enough to give you 5, 10, or 15 points, since 2005, when I left equities and came to futures, green as you get, never seen a day that the S&P did not offer an opportunity to pick up a couple points. So the man that has the pockets to trade 10,000 Emini contracts a day, he understood a very simple thing. If I can consistently take 2 points a day out of the market, well, the story tells itself. He has a seat on the exchange, and I asked him on the show, I said, so how did you come to trade that many contracts? You're going to love his answer. Vetted and the truth. Well, I started out trading one, and then the money that I earned, you know, I added another one, and as I made profits, and you know, I just kept adding, and then all of a sudden, you know, I am where I am now, years later. Hand to God, true story. It's on the internet. You got to believe it, right? No, it's on our podcast feed on iTunes. It's on our blog. I'm sure you can find it. I'm trying to remember his name, Michael X. Yeah, he didn't want to give out his last name, but again, this is a true story. Okay, it was vetted. Nobody was blowing smoke up our chimney. And if you listen to the interview with him, you might think you're going to hear some brash, loud, chest-thumping guy. Not. Quiet, mild-mannered. I'd ask him a question. I literally had to pull the answer out of him. He wasn't showboating. He only even came on the show because we were so, myself and my co-host were so fascinated with him that we just wanted him to tell a story to the world. And he did. I think he came on about a total of 3 times. So, Bruce says, but your commission cost is 10 times higher. 10 times higher than what, Bruce? I'm not sure if you just put that in or not. Tell me what you're referring to, Bruce G. Commission cost is 10 times higher. All right, I'll give you time to type in. Okay. So, we were able to identify a high probability trade setup coming into the show. We didn't know what would happen next. We just knew what the highest probability thing was. And that the 1 out of 10 that succeeds as a trader understands it's not about their dashing good looks, how tall they are, or how fast they can run. Not even about how smart they are. They understand that it is a business based on probabilities because nobody, and most people don't want to admit it, because nobody knows what's going to happen next. And so they rely on, they find a definable edge, which I think you might agree is what I just showed you. They take a definable edge, which tells them what the next highest probability thing in any situation might be. And then they simply apply it. They turn off all the noise. They don't confuse themselves. They know what their trade looks like. They know what their setup looks like. They know they have a definable edge. They know there's a high probability, not a promise, but a high probability that it will produce some profit. That, and a teacher helps. Somebody to look over your shoulder. So am I pitching our services? Well, I'm just telling you about them. I'm telling you what we do, because I know a lot of you are on a trial this week. You're in the room, you're in the alert, you're on the Telegram with us. If you're on the Telegram, by all means, participate in the discussion group. If you type questions in, and I'm not there, one of our other traders will be more than happy to try to answer the question for you. And they know that they have my full permission to answer your question, to say most anything, as long as it's the truth, right? Because the truth will set you free. Trading is not easy, but it can be simple. And everything that Michael and I have put together over the years, going all the way back to when we met in 2006, I launched CFRN in 2005. I was desperate, met him in 2006. He was kind of desperate too. We put our heads together, and by 2008, we were starting to see some good daylight. And you know, our indicator sets, our rules, they haven't changed in over 6 years. Before that, there was just a couple minor changes, but what we do, what you just saw happen here on this S&P 30-minute chart, it's fluid across every time frame, from 1 minute to monthly and beyond, and every market, from gold to the S&P to soybeans to the Dow to copper. There's no market where it's not fluid, because the foundation of our methodology and our indicator set is not to know the unknown, but to know the known, to help identify it. No matter what market or what time frame you apply our indicators on, it's got one job and one job only, and it does it better than anything I've ever seen. Oh, this time frame, this market, all right, let me go to work. It goes in, it identifies the underlying rhythm of the market, any time frame, and then it clearly points out the high probability setup. That's it. I have nothing against any other methodology that works, or any indicator or oscillator that works. I know lots of people that use a MACD and a stochastics and an RSI and an advanced decline line and a trend and a tricks, and it works for them. It works for them. But see, Michael and I had gone in the wrong direction too long. There wasn't an indicator or oscillator on planet Earth, I don't think, that we hadn't bought or created or used. And when we couldn't afford any more monitors to put our stuff on, we began to realize that, you know what, this is just a lot of noise. Now, it's one thing to throw out something you paid for. It's even harder to throw out something that you spent a lot of time creating and coding and all that kind of stuff. But we did it. We did it until we pared it down to where we are now. And I've said this before, I'll say it again. Anyone out there, and I'm not bragging, I'm not boasting, I'm just thankful that we finally ended up in this place. Any indicator, oscillator, methodology, trade calling service, guru, it doesn't matter. I will put what we have and what we do, as simple as it is, as elementary as it seems. What's that guy, the amazing Randy or something, who's had up that $1 million challenge for a long time? Okay, I'm not going to put up $1 million, but I will certainly, anyone that can bring me a forecast, an analyst, anything, a methodology that outperforms or has outperformed what we do, what our stuff does, over these past 6 years. I won't give you $1 million, but I'll give you something. I'll give you some cash and valuable prizes. And I can say that and not lose sleep tonight, because all we do is flow with the market. If it's going up, let's get long. If it's dropping, you don't have to get short, but don't go long, right? And one of the most beautiful things about our indicator set is not only does it point out the high probability trade setups, when the market is not conducive to trading, you know the market does three things: goes up, goes down, goes sideways. When that thing starts going sideways, our indicators will make it very obvious that that's what the market is doing. That means there is no high probability trade setup. Anything you do is a coin flip. It's a gamble. We don't gamble. We get up and go to work every day. I hope you'll join us. If you have a Telegram ID, email it to Valerie, support@cfrn.net. If you don't have a Telegram ID, go get one, telegram.org. Put it on your desktop, put it on your phone. It's free, and you can enjoy the rest of our trial through tomorrow. Runs 24/7. Now, Bruce, I see you typed in then one. I'm still not following you, but I'm sure I will if you just give me a hint.
I think it's the 10. He's referring to 10 contracts is going to run the 10 times commission.
Oh, well, thank you so much. Now, see that, ladies and gentlemen, that was Val. Thanks, Val. It's so obvious now that you said that. Yes, that's true. If you trade 10 contracts, it will cost you, well, broker we use, the S&P, $5.80 per round turn. So 10 contracts would cost you $58 total. That's the getting in and the getting out. With stocks, when you see those prices on TV, $10 stock trades and whatever, well, that's 10 to get in, then 10 to get out. With futures, it's always been quoted as a round trip ticket. So that $5.80 you pay, that gets you in, and it also gets you out. So thank you for pointing that out, Bruce. That's something I had failed to talk about, and I'm glad I did. So again, anyone that wants to participate in the remainder of the Logic 247 alert trial, and you can even come into the room tomorrow morning if you would like, just send your Telegram ID to support@cfrn.net. If you don't have a Telegram ID, call 949-42-EMINI, and somebody here will walk you through it. It's a piece of cake. You can go to telegram.org and have it all done yourself in 5 minutes. It's really intuitive, and the stuff on the screen will just walk you right through it. Okay? Alrighty then. Good word for the day. I have it on good authority that I have it right. Bruce, I'm not sure what you're referring to. If you're trading the S&P, last time I looked, that was the price for self-directed trading. Now, if you're using broker-assisted trading, that will run you more. So I don't know your particular situation, but that's the deal. Okay, let us jump up right here. Good word for the day. Go deeper. You ever had somebody go, wow, you're deep? Maybe not. I never have. Luke 5:4 says, launch out into the deep. The disciples had fished all night and caught nothing. Zip. Zero. Nada. Yet. Then Jesus said, launch out into the deep and let down your nets. Now, they rolled their eyes a bit. They were tired. But once they had done what he said, they caught a great number of fish. That's Luke 5, 4 through 6. In fact, it's told that there were so many fish, they had to get some other boats to come help them bring in the haul. Now, notice 3 things from this passage. Number 1, working harder isn't necessarily the answer. In trading, you got to apply yourself. But you reach a point, you don't need any more screen time. Lord knows you don't need another indicator or oscillator. So, I appreciate the fact that you got a good work ethic and you want to work hard, but it's not the answer. The disciples toiled all night. I guess that was their version of Globex. Nobody could question their work ethic. But when you fish in water that's too shallow, no amount of effort will bring results. Go down the same road, you'll always end up in the same place. People go, I can't believe I blew up another account. Why can't you believe it? You went down the same road, you ended up in the same place. Unless you change your path, it's going to keep happening. Number 2, you need to obey God even when you don't understand his plan. Now let me just interject here. God is not going to come in and move the market for you. You get into a bad trade and you got a huge drawdown, you can pray, you can flog yourself with one of those things, put stripes on your back. He ain't going to touch it. I'll get a hold of me and I'll go into the long story. Or maybe I'll do it tonight in the workshop. There's a long story behind that, how I came to that realization. Now, I'm not saying God's not on your side. I'm not saying God's not there to help. But he cannot move the market for you. And I'll explain why. In Telegram, tonight in the workshop, or Friday in the Q&A. Just remind me. Obey God, even when it doesn't make sense. Peter, a seasoned fisherman, had to set aside his pride and say, nevertheless, at your word, I will. In 2 Kings chapter 5, Naaman had to humble himself and bathe in the Jordan in order to be healed of leprosy. In Gethsemane, Jesus displayed the same attitude when he prayed in Luke 22:42. Not my will, but yours be done. He knew what he was facing. He knew what was going to happen over the next 12 hours. Number 3, going deeper always works. Luke 6:48. Jesus said two men built houses, but only one house survived the storm because the builder dug deep and laid the foundation on rock. If your trading strategy, if your methodology is based on some gimmick, it's not going to last. It's like the house built on sand. Whether you learn with us or someone else who will actually teach you, you got to put a firm foundation under your trading business. It's got to be built on solid rock, bedrock. Dig deep. Make sure you understand how to be consistently profitable before you go live. And once you have the foundation, you don't put the roof on. No, you gotta frame it. You start with 1. And those profits allow you to go to 2. It's all in the 24/20 blueprint. Author Phil Yancey's former pastor said he sometimes felt like an old hand-operated pump. He said everyone who came along would reach up and pump vigorously a few times, and each time he felt something drain out of him. Reached a point, like many pastors do, he was just burned to a crisp. He had nothing left to offer anyone. At a ministry retreat, he expressed his thoughts to a nun, a very wise nun. He expected her to offer soothing words about what a wonderful, sacrificial person he was. Instead, she gave him some great advice. There's only one thing to do when your reservoir is dry, she said. Go deeper. So friends, the word for you today, go deeper in God, because that's where the answer is. And that's our good word for the day. See you guys in the workshop tonight and on Telegram. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.